Hi, welcome to my video. This video is part 2 for your chapter 6. In this section, you are going to learn a concept called provision for doubtful debts. So let's look at the explanation. When a company foresee or predict that it may have a possibility of bad debts in future, it will provide provision for doubtful debts. The application of provision for doubtful debts is using prudence concept. So let me use a diagram to explain this. Let's say your company, you have a list of trade receivables. For example, you have A, B, C, D, and so on. So A owe you 100,000, 200,000, 300,000, and 400,000, and so on. Think about it. Can you confirm that all trade receivable will fully collect? Can you confirm that all of your customer or all of your trade receivables will fully pay their outstanding amount? No, right? You think that in future they may have a possibility of bad debts. This is just your estimation. This is just your estimation. You cannot tell which customer is going to have bad debts. You just foresee that in this total trade receivables, they may have some receivables which cannot pay you. So you have a possibility of bad debts. So when you apply this possibility of bad debts, this is known as provision for doubtful debts. This is known as provision for doubtful debts. So let's look at our textbook. Accounting treatment of provision for doubtful debts. When this is first year or this is the initial recognition for your provision for doubtful debts, your double entry is you debit the allowance for doubtful debts. Allowance for doubtful debt is your expenses under income statement, and then you credit to your provision for doubtful debts, which is your asset under SOP. We have two situations in second year and moving forward. In the subsequent year, if this is an increase in your provision, the treatment will be the same. You debit the allowance of doubtful debts, which is the expenses under income statement, and you credit against to your provision for doubtful debts, which is your asset under SOP. This refers to your provision increase. Second situation is when your provision decrease in the future year. When your provision decrease, you have to debit the provision for doubtful debts, which is your asset under SOP, and then you credit the allowance for doubtful debts, which is your income under income statement. So you may get confused, sir, why this allowance for doubtful debts can be expenses and income? How to identify it, or how to recognize whether the allowance for doubtful debt is an expenses or income during the year? You just need to remember that when your provision for doubtful debt increase, this will be your expenses. If your provision for doubtful debt decrease, this will be your income. Because if your provision for doubtful debt increase, it means that you foresee more bad debts in future. When you foresee more bad debts in future, your expenses will increase. However, if you foresee that you will have a lesser or decrease in provision for doubtful debts in future, it means that your loss or your bad debt will become lesser. When your bad debts become lesser, this is an income to you. And take note that provision for doubtful debt is a negative amount in asset, and this is not a liability in SOP. So later on, I will show you the disclosure in statement of financial position. Formula, we have a formula to compute the provision for doubtful debts. Provision for doubtful debts formula, we use the trade receivable. Your trade receivable must net of bad debts, and apply a percentage. This percentage will be provided in the question, and this percentage will be the rate of provision for doubtful debts. You no need to come out your own percentage. This percentage will be provided. So let's use classroom exercise 6.3 to practice this concept, provision for doubtful debts. General Limited has a policy to recognize provision for doubtful debts for its trade receivables. The following is the transaction of details from 1st April 2013 to 31st March 2016. Trade receivables as at 31st March 2014 is 354,000. The management set a provision doubtful debts 5% based on the total trade receivables. So this is for year 2014. And for 2015, they say that the trade receivable is 478,000. And they say that one of the trade receivables cannot pay the amount. The rate of provision for doubtful debts remain unchanged as compared to prior year. At year 3, 31st March 2016, the trade receivable is 289,000, and they determine that only 4% of the trade receivables will not pay us. So the provision for doubtful debts is 4%. Based on the above information, please prepare the following account from 1st April 2013 to 31st March 2016. We have to prepare bad debts account, provision for doubtful debts account, allowance for doubtful debts account, income statement, and statement of financial position. So you can use the account at page 101. So we start from 31st March 2014 calculation for provision for doubtful debts. Provision for doubtful debts. So the first year that we have to calculate is 31st March 2014. So the formula is using trade receivable minus bad debts and multiply with the percentage. So 31st March 2014, our receivable is 354. Do we have bad debts? No bad debts, right? So apply the 5%. How much we get? 354 times 5%. We get 17,700. 17,700. And this is our first year. Let's look at the textbook. The textbook say that if this is a first year for your provision for doubtful debts, you debit the allowance for doubtful debts and credit to the provision. So we go to the account ledger, debit the allowance, so 2014, March, 31st of March. So we write provision for doubtful debts. Value 17,700. Credit goes to provision for doubtful debts 2014. End of March, we write allowance for doubtful debts 17,700. So if there is no more transaction, then we can close the account. Provision for doubtful debt is your asset under SOFP. So the method that we use for closing, we use balance CD to close it. Balance CD 17,700. and this amount will bring to next financial year. $17,700. Next, for the allowance for doubtful debts, this is your expenses or income. So this is first year, right? We look at first year. First year is your expenses, and you can use another technique. If the closing of income statement is on the credit side, then this is your expenses. So 2014 March, we write income statement 17,700, and this is your expenses. Next, we have to prepare the income statement. So for income statement, we reserve some place for income, and this is using for expenses. So this one we write allowance for doubtful debts 7,700. And for the statement of financial position, this is asset and current assets. So the item we have is trade receivable. Value of trade receivables is 354. This is from the question. And then for the provision for doubtful debts, this is a negative amount, so we show less. $17,700. So the net trade receivables at the end of 2014 is 336,300. So this is for 2014 net trade receivables. Next, we look at second year information. Second year, year 2015, it says that my receivable is 478. The company determined that one of the trade receivable cannot pay us 6,000, and then the rate of depreciate rate for provision for doubtful debts remain the same, which is 5% as per previous year. So second year, the date is 31st March 2015. We use the receivables amount, which is 478. However, we have a bad debts, so we have to minus bad debts 6,000. Why we know this is bad debts? Because it say that cannot collect. It's not, will not be recovered. It means that you cannot collect this amount. For uncollected amount from your receivables, we call it as bad debts. And then apply with the percentage, 5%. So how much we get? 478 minus 6. The net receivable is 472. Then apply with the percentage, 5%, 23,600. And when you compare second year provision for doubtful debts, you need to do a comparison. What is your last year provision for doubtful debts? Your last year provision for doubtful debts is 17,700, right? So tell me, your provision for doubtful debts increased compared to last year or decreased compared to last year? The answer is your provision for doubtful debts increased as compared to last year. Why? Last year you foresee 17,700 amount cannot be collected, but this year you foresee 23,600 you cannot collect it. It means that your provision for doubtful debt increased. When your provision for doubtful debts increase, this is your expenses. So let's determine how much of the increment. 23,600 minus 17,700. So your provision for doubtful debts increased by 5,900. So when we record in our account, we only record the increment. We only record the increase in the amount. So let's take a look on our textbook. So we look at this situation because this is increase. Subsequent year, if increase in your provision for doubtful debts, we debit the allowance for doubtful debts and we credit to the provision for doubtful debts. Take note, we only record the increment, which is 5,900. So we debit the allowance for doubtful debts. The wording we use provision for doubtful debts. The amount is 5,900. So this amount will be credited to which account? Will be credited to provision for doubtful debts account. So the wording will be the same. We write allowance for doubtful debts, and the amount is 5,900. So don't forget about your bad debts. During the year we have a bad debts of 6,000. So these bad debts shall also record in our account. So when we have bad debts, we debit the bad debts account. So we write trade receivables. The amount is 6,000. After that, we can close our ledger. So for the bad debts, this amount we will transfer to our income statement as the expenses of the company. For the provision for doubtful debts, this amount we will carry forward to next year. So the balancing amount is on here. So we write balance CD. The total amount will be 23,600. And this amount will bring to next financial year. For the allowance for doubtful debts, this is our expenses. So we bring this amount to next financial year. Sorry, we bring this amount to our income statement, 5,900. Class, let me explain this provision for doubtful debts account to you. So based on our previous computation, we say that at the end of 31st December 2015, our provision for doubtful debts will be 23,600. So if you just record 23,600 in your ledger, for example here you write 23,600, your carried out amount will change to 41,300. It means that you cannot match again. You cannot match your balance CD to the computation here. So the keynote is, when you calculate your provision for doubtful debts, this amount must be your balance CD amount in your provision for doubtful debts, or we can say the balance PD amount for the opening of next year. How to achieve this? So we only record the difference between last year and this year, which is 5,900, in order to make sure that at the end of 31st March 2015, our provision for doubtful debts is 33,600. I repeat, we only record the difference in our ledger. So this is the things that you have to take note. So let's record in our income statement and statement of financial position. So in 2015 is 5,900 for allowance for doubtful debts, and then we have a bad debts which is 6,000. And for the trade receivables, we have to record the net trade receivables. Your net trade receivables will be 472,000, because this is a bad debts. Bad debts have to minus your trade receivables amount. So 472. Why we need to minus our trade receivable amount? Because the bad debts is confirmed. The bad debts is confirmed, so we have to minus. However, provision for doubtful debts is just a estimation. It's just an estimation. That's why we not required to deduct the trade receivables amount. And what is the provision for doubtful debts in year 2015? 23,600. You always look at the balance CD amount. We always look at the balance CD amount, 23,600. So your net receivables will be 448,400 after the provision for doubtful debts. Next, we come to third year, which is 31st March 2016. 31st March 2016, your receivables become 289. There is no information about the bad debts, and the rate for the provision for doubtful debts become 4%. So this will be your third year. Third year is on 31st March 2016. My trade receivable balance is 289,000. I don't have any bad debts, so I can ignore this minus, and the rate is 4%. Answer: 289 times 4%. So I get 11,560 for this year. Similarly, when you get a new provision for doubtful debts, you have to compare with last year amount. So what is the last year amount? Your last year amount will be 23,600. Don't use the 17,700 because this is the first year. For the last year, we always use the immediate last year, which is the second year, 31st March 2015. Your provision for doubtful debt is 26,600, and we have to do an analysis. Our provision for doubtful debts increase or decrease as compared to last year? The answer is decrease. Decrease by how much? We use 23,600 minus 11,560. So our provision for doubtful debts decreased by 12040. So this is decrease. For decrease in the provision for doubtful debts, this is our income. Why income? Last year you foresee that 23,600 of the receivable cannot pay you, but this year you only foresee 11,560 amount maybe cannot collected. Is it a reduction or decrease in your provision for bad debts? If decrease in your provision for bad debts, this is an income for the company. Again, we only record the difference in the ledger. So let's go to the textbook. So this is on the third situation, if decrease in provision for doubtful debts. When we have a decrease in the provision for doubtful debts, we debit the provision for doubtful debt first and credit to allowance. Remember, we only record the difference amount. 12040. Okay, 12040. So we debit the provision account first. So this is 2016. We write allowance for doubtful debts 12040, and then this amount will be credited to the allowance for doubtful debts account 12040. Next, we have to close the account. So we close the allowance for doubtful debts account. So this is an income for the company. So we write income statement on the debit side 12040, and then we have balanced the allowance for doubtful debts. Next, we look at the provision for doubtful debts account. So for the provision for doubtful debts account, credit balances is 23,600 and the debit balances is 12,040. So meaning that the balancing amount is on the debit side. So we write balance BD, CD. What is the difference? The difference will be the 11,560. So we use calculator to prove our answer again. 23,600 minus 1240. So 11,560. So we bring the amount to next year. Our balance BD will be 11,560. So from here you can see that the balance CD amount must equal to your computation. Alright. So let's come to income statement. So for income statement at year 2016, we have income. The income is 12,040. And for the trade receivables, 289 is the receivable amount, and the bad debt is 11,560. So our trade receivable after the deduction of provision for doubtful debts is 277440. So that's all for your classroom exercise 6.3. If you have any question on this question, you can leave me a message in LMS or use the comment function in YouTube. And for your information, we will practice home exercise 6.1 when we have the online lesson. And that's all for chapter 6 video. Thanks for watching.